the utility of the different types of investors out there is valuable because of the ever-changing market. Right now, we are experiencing a situation where, I mean, frankly, it's hard to raise all kinds of money, but institutions have been on the sidelines for the last 18 months at least. And yeah, maybe for the right deal, they're back for sure. But by and large, it's very, very difficult. And I'm not saying that raising retail equity is easier or easy, but there's just times in the market where one is more advantageous than the other. And then additionally than just market circumstances, there's also deal specific circumstances where a different type of investor is a better fit. I'll just say that the world is changing as it relates to private equity. And I mentioned the word disintermediation. That's the SAT word of the day. Disintermediation is when you take some chain or process and you take a link out. You kind of take out the middleman. So disintermediation in this context is we're the sponsor doing the deal, we're operating the investment. And then typically, if we were to partner with a joint venture firm, like let's just say, to make a really dramatic example, let's say our LP is CalPERS, all right, so California State School Teacher Pension Fund. Well, they're our LP, but then who are their LPs essentially is all the school teacher pensions. And so that's the whole chain. And in reality, that chain is much, much longer, because if you're talking about actually CalPERS, you're talking about those teachers' pensions. You're talking about being managed by the pension fund, which then is an LP of Blackstone, which then is an LP of some fund, which then is an LP of the actual sponsor doing the deal. So there's a big, big chain there. And we're doing our part to disintermediate and take out some of those layers where if we can build a connection through an online medium like this, or through referrals or word of mouth, and we can have a high net worth business owner or doctor or something like that invest directly with us, we just took a couple layers of that chain out. Because traditionally they might have gone to Fidelity or invested in their 401k, and that would have trickled in to eventually finding itself an exposure into a direct real estate deal like what we do. So anyway, I think the world is changing, and this disintermediation is happening more and more, and that's due to technology, it's due to reach, it's due to the different ways that people find out about things and invest.